Hey friends, Lucian here with the Bullish Bears team. This video is going to be on how to use moving average lines to trade trends. If you look at my chart here of Apple, you'll see some lines right over here on my chart, all different color lines. If you look right over here to the left, you'll see what these lines are. They're a combination of exponential moving average lines, or EMAs, and simple moving average lines, otherwise known as SMAs. Now, these are very important support and resistance lines, are very popular ones. They are lagging indicators, so nothing is foolproof. They are not foolproof indicators, but they are helpful when determining support and resistance levels. So on my EMAs on this chart, you'll see 9 and the 20. So those are the 9 and the 20 EMA. If you like to use the 13 EMA, then you don't really need to use the 9 and the 20. It's kind of an equilibrium, or the in-between between the 9 and the 20. So you can use either the 13 EMA or the 9 and the 20 on your charts. And then I have the popular simple moving average lines of the 50, the 100, and the 200. Again, everybody has their own versions of what they like for moving average lines, but these are very popular ones. And the way I like to break it down is, price is like rubber bands, right? So the more you stretch out a rubber band, it naturally wants to snap back to those equilibrium levels. And this holds case with, again, stocks, especially with large cap stocks. The more overextended they get, the more further away from those moving average lines, the more they want to naturally gravitate back. And that's where it shows popular support and resistance levels. So while, again, moving average lines are not foolproof by any means, they are very helpful guides with determining support and resistance levels. So when you're doing, trend trading, obviously you're choosing the time frames, that are your preference. If you're doing several weeks to several months out, you might be looking at those weekly and monthly charts. If you're doing less than that, maybe a few days, few weeks, you might be zooming in on more of those daily, hourly, maybe weekly charts. And then you're finding the trend, right? So if price is riding these moving average lines like you see like this is riding a nice bullish trend. You can see this 9 and the 20 EMA. These are short-term trends. So when you see price kind of hovering and riding above that 9 and the 20, that's riding a nice short-term uptrend for a while, or a nice longer-term uptrend in this chart right here of Apple. So when you see price kind of riding those, tight, those 9, 20 EMAs, that's great, so that's a great uptrend. And then you'll see, when price is failing those moving average lines, kind of falling below the 9 and the 20 down here. So that happened a little bit less period of time. Again, every stock chart is different. But, when you see price riding close to those moving average lines on the way up or on the way down, you like to determine, those trends, right? Very, very important. And then you'll see things like this where it gets very messy and it becomes like a roller coaster. So you can use trend lines as just very important, support and resistance levels, and turn, those moving average lines. You can kind of almost, a lot of times, they're almost basically like drawing trend lines. You almost don't need to draw a trend line where you look in here and you can see, well, price is just really near to, these moving average lines where you don't necessarily, let's say, if you look right here, you don't really need to draw your trend line because it's kind of doing it for you when it's near those moving average lines. So again, not foolproof, but it's a nice helpful guide, right? So you don't necessarily need to draw your trend lines, if you're using those moving average lines at times. Again, you still want. So when you're trading something like this, you could kind of, the short-term momentum as it's riding above, you can determine, depending on your entry, if you get a good entry, let's say you get an entry way back over here off that 9 EMA, you might decide, hey, I'll use a candlestick close half or more below the 9 EMA and get out, right? So you could wait to over in here. You can take profits along the way as it's overextended, looking for entries back down, right? You could also look for moving average crossovers right here when you see stuff like this where they're crossing over or they're kind of crossing, upwards right down here. Look for moving average crossovers, right? That shows potential momentum shifts when that happens. So you can do a riding the trend or the moving average line on the way up. You can give yourself more leeway if you have a good entry. Again, when you're trading options, you're going to have to take profits along the way unless you have several month out options contracts. But again, using kind of those moving average lines as a guide, very, very important, right? And then you'll see many times you can see stuff like right down here, you can see as price falls, dip buy opportunities. Price as it falls above a major moving average line and holds that 50 SMA, this is where a reversal might come in. You come in on a reversal strategy, you use those moving average lines above as resistance, right? So if price fell, maybe you would stop out, right? But if it, obviously in this one, it continued going up, it got back above the moving average lines. And then you'll see as it's riding a trend, a lot of times these candlesticks get much bigger. And like I said, like stocks are like rubber bands. They naturally want to gravitate back. So when you see price getting like kind of very overextended out here, that's where you would consider taking your profits, right? Now, be aware of news, what's going on that shakes, causes lots of volatility in the markets. And as of right now, there's the election and coronavirus. So you'll see these candlesticks much bigger and much crazier than when you see them up over in here, right? Smaller candlesticks, more defined trends. And this is where you come in and you start seeing these kind of like the craziness where it's like kind of in this kind of range bound or sideways kind of price action right in here. This is where, again, you'd look for things such as iron condors, or maybe you trade, either neutral strategies, or maybe you don't trade at all, you stay cash. And you can see kind of when you zoom in here, there's a crossover here, there's a crossover, kind of in these areas here, right up in there, and then, right over here, and then another one over here. So there's like 4 of them happening right over here. So this is where just because you see a crossover doesn't mean it's going to change directions. It can get trapped. It can trade sideways. So, with, trend trading, if you're choosing a direction, bullish or bearish, you want to see it ride up like this or kind of ride on the way down. If you're doing those neutral strategies, iron condor, stuff like that, then these range-bound markets are, this is what you're looking for, if the market's trading sideways. But again, these moving average lines, they're a very, very helpful guide. Again, not foolproof. You don't need to use moving average lines. I could take off my indicators off the chart, not use them, and just kind of remove, I could just leave those drawings there, and then I can kind of come over here and draw my trend lines this way, right? So connect peaks and valleys, right? So that's one out there. I could come in closer, obviously, as it was happening probably, before it changed. So you can see there was like that short-term trend over here, and then price kind of fell back down. So if I put those indicators back on my chart again, you can see basically it's happening right around that 9 and the 20 EMA and the 50, right? So you can see even with the indicators off, when I put them back on, it's happening many a times right around those popular moving average lines. And what happens in the past also affects the future. So if you leave those lines there many times, you'll see price hitting those levels right down here again. You can see my trend line going out. Price action is, retesting those areas. So support and resistance and trend lines, so incredibly important. So this tool right here, Trend Spider, it's a very handy tool. It does trend lines automatically for you. You can play around. There's lots of features. You can add them on, play around up here. So many different things. It's very customizable. They can do automatic trend lines, all that good stuff. But basically with connecting trend lines, you're connecting those peaks and valley levels, right? So if I turn this off, it's as many peaks and valleys as you can connect, kind of these levels like this. Find these channels, right? So you can see these, it's not perfect right now, but kind of gives you an idea of those channels. And as you can see, it just extends out to the future, and price action, lots of this stuff happens out to, whatever happens in the past can also like happen into the future. So again, when I put in like my indicators, put them back up again, you'll see it's just kind of like, it might, if you're new to watching this, it could be like, what? It comes over time. Again, this stuff takes time to learn, especially if you're new. That's where our courses will help you. Our ebook, we have a candlesticks ebook and wallpaper backgrounds. Make sure you download them under our courses section so you can learn all these different patterns and how they work. So moving average lines and how to trade them and how they work when trading trends. Again, it's something you either used as a guide when price starts to fail those moving average lines or they start to consolidate. This is where, like, if you're in an uptrend and you start seeing, like, this kind of, like, it definitely, as it's starting to fail or cross over, that momentum's looking to shift, right? As it's falling like this and you see them kind of crossing over, now you're potentially having a new going from bearish up to bullish, and that's where you can look to watch for, let price break out and then come back and consolidate to those moving average lines again, forming those flag patterns, right? So let that crossover happen, let it move up, let it consolidate back, get those bull flags, get a small little entry down here, and this is where you can let ride that trend and decide. I mean, you could still, if you were in shares of the stock, you could technically still be in it, right? But along the way, again, important to take profits, especially if you're trading options with time value. So hopefully this video helped you, and make sure to take our courses. We have and download our ebooks and our wallpapers to help you with learning more candlesticks, patterns, and trend lines.